All right, well, good afternoon or good morning, depending for where you're joining us from. I'm Colby Duren. I'm the Director of Policy and Government Relations at the IAC, and very excited to be moderating this incredible panel focused on Cdfi's and agriculture diversification. Obviously, everyone knows Cdfis are a great option for financing agriculture operations. And so we're going to focus on two native Cdfis and their work helping agriculture producers. And so we're very lucky to have two incredible speakers join us to talk about their work. First, we have Lakota Vogel, who is the executive director at Four-Band Cdfi. This role, she's not only provides leadership, but establishes and fosters new and existing partnerships, manages organizational goals. Prior to that, she was the assistant director for 5 years. She's a graduate of Notre Dame with a Bachelor of Arts in Sociology, and also has her master's in social work from the Washington University in St. Louis as well. And Lakota is an enrolled member of the Cheyenne River Sioux tribe. Our other speaker is Skya Ducheneaux. Skya Ducheneaux is the director of the Akiptan Cdfi. And she spent her first 18 years of her life on a ranch in the Cheyenne River Sioux tribe in South Dakota, and is a graduate of the Black Hills State University, where she has her bachelor's degree in business administration. After the summer of 19, completing her master's in business administration from Capella University, she also worked for the Intertribal Agriculture Council for several summers, and also as a coordinator, and then was introduced in the world of native Cdfi networks, and then has since that time taken over and been running Akiptan. So with that, please welcome our two speakers, and please take it away. And I'll put the PowerPoint slides up that you'll have.
Well, thank you all for joining. I've joined in a few sessions, and I think CDFIs have been mentioned a few times, which is great here, actually. So once again, my name is Lakota Vogel, and the CDFI that I work for is located on the Cheyenne River Reservation in north central South Dakota. It's 20 years old, so we've been around for a while. So I'll kind of just briefly explain what a CDFI is. CDFI stands for a community development financial institution. So oftentimes, community comes first in that. And generally we're structured as nonprofits, and we have missions that differ all across all of the CDFIs. So there are actually 1,000 CDFIs in the nation, and we're certified by the Department of Treasury. So you have to go through the paperwork process to become certified. You can set yourselves up as well as being tribally chartered or not tribally chartered, and chartered with the state or incorporated in the state. So that band setup is we're tribally chartered and incorporated in the state of South Dakota, and that can go either way depending on the mission of the organization. We have nonprofit boards as well, so we have a board that manages, is fiscally responsible for the organization. Generally our missions have some sort of community economic growth. We want to ensure that we're offering services, the community itself can grow, and usually we are sprung out of the need for access to capital. So most of the time, community members have noticed they weren't able to access capital, whether that's through mortgage lending, business lending, ag lending. So they wanted to create revolving loan funds, and that's what we do. We have a mission. We have to serve the underserved. You have to prove that you're serving persistent poverty counties, at least some percentage of what the work that you do. We also do all types of loans, and with that, it comes with a coach or a technical assistance is the word we say. So you have to do and provide technical assistance to your clients as a CDFI. So within that 1,000 across the United States, there's actually a great amount that are native focused. There are 70 certified in 27 states, and that number might kind of fluctuate depending on what's going on in that community. But I think the last time I heard it was around the 70 number. Go for it, Skya.
Next slide.
Next slide, sorry.
So the thing about CDFIs is that we're so much different than a traditional bank. Like Lakota mentioned, we're nonprofit lenders. We're not like a bank. We're not a depository. We're not as heavily regulated. So along with that, we get to be more flexible. We get to be more innovative with what we do. We're not just worried about making money. We're worried about our clients, and that kind of allows us a lot of flexibility. And then even on top of that, we also pair all the financing with technical assistance and other programs. Like I know Lakota over there, like at Forbans does like bite attack services and a bunch of other things. So I've heard Kota say it before, we really are a one-stop shop because we're able to offer so much more than banks do. And with that, we do financing different. We don't just look at the money coming in and then the collateral and say, yes, no, like we're gonna lend to you. We take more of that holistic financing approach. So we can help you build that business plan from the ground up, or we can jump in right where you're at and help you go from there. We don't just look at the numbers. We look at everything and see how we can help and how we can improve what's going on. And so that's really cool. And like another good way to be able to finance your operation, to have those resources available. Just that in-depth financial planning, and that's oftentimes just catered to each individual client as well. So like if someone were to come to me with 50 head of cows, we would do that in-depth financial planning there. Or if someone were to come to me with 1,000 acres to plant, we do things differently for each client. And we're more borrower oriented than traditional banks, just for that same reason. We're a nonprofit, we're mission driven, we're not so much worried about the profits. We're there to help the economy and to help our clients. And then so a lot of this diversification can happen in different ways, through partnerships and gap financing and different things like that. And what I mean by that is I'm going to give another cow example, but for cows specifically, you need more cows to make more money. You need more land to make more money to plant your crops, different things like that. With banks and all their rules and restrictions, and they need so many ratios and all that, they might not, they can see it's a good plan, but their policies don't allow for it. And so there's a gap in your financing needs. A lot of times CDFIs are more comfortable with those risks. And by putting together a good plan with our borrowers, we will match that gap, or we can bridge that gap financing, which meets a lot of the needs in Indian country, just especially since Indian country is a credit desert, among all kinds of other deserts. But with that credit desert, there's always just a gap in financing, and then we can be there to help fill that with this diversification. So if your bank or the farm service agency aren't wanting to deploy more financing to you to help you meet your goals of your operation, you can definitely turn to your CDFI. We also do a lot of partnerships. About a year ago, Akiptan, Forbans, and then a traditional lender, we took on a client and did a total refinance, and we all hit our strengths. So Akiptan, over here at Akiptan, and I'll touch on that here in a little bit, we've got an interest-only program where you only pay interest only for a couple of years. So we were able to take that and apply that to the area of the ranch refinance. That made sense. Forbans is more familiar with other parts of that operation, so then they were able to take their strengths and do it there, and then the bank was able to finish up what we couldn't because of like lending limits and different things like that. And so we set this guy up with a total refinance and to help his cash flow and just in all that. So that's something that we can do as CDFIs too. So your main lenders you always think of for egg lending are either your local bank or the FSA, farm credit services, and different things like that. But CDFIs are here to help with that financing as well. Just because we don't, like I said, we don't have all the rules, we can be more innovative, we can be more flexible, which is just really exciting. And my favorite part of being able to be here at Akiptan is I get to put together a plan that works for the producer without the million rules I have to, and hoops and stuff that I have to jump through. So. Next slide, Colby.
So just to give a little bit of that holistic approach that Skya talked about, Band started in 2000, and we were born out of the tribal planning office. Like I mentioned before, there was a need in the community for access to capital, specifically the arts community. Artists were noticing that they weren't able to access their small business. So The tribe put it into their CEDS document, their community economic development plan, and said, we want to start our own revolving loan fund. And what it ended up being is established as a nonprofit that fundraises. So we go ask other folks for money and then re-lend out to the community. And as it's paid back to us, we can, lend it. So that's why it's called the revolving loan fund. Our theory of change from the beginning has been to start off educating. So if you look over there on that graph, it's starting with the education point where any type of person can walk into our door. We do serve all residents of the reservation. That's our target market. And then we did extend to serve the whole state of South Dakota for all natives living in South Dakota. But on the Cheyenne River, we specifically chose to serve all residents on Cheyenne River. So the first point is educating. We know financial literacy has been low across the nation. It's actually not good for America in general. So we need to educate individuals about what it looks like to be financially capable. And then at that point after education, it could look like, building your credit, learning about how to build your, it could look at just, build a business. We do a 6-week business development course. It's just one night a week. It's not that intensive, but you receive one-on-one, technical assistance coaching, no matter what that is. So we've seen everything from prairie dog eradication businesses to restaurants to a race car driving business, actually. And another one is like a horse racing business. So we've seen it all, and we help you take from wherever you're, I mentioned, including agribusiness, so with your plan to be a producer. And we finance. So then we talk about, well, how can you come in and finance this? And it doesn't always mean our money. We can help you get money from a bank. We can help you get money from FSA. We can help you get money from, any product that you're looking for, but it's about finding and financing, that dream. Then there's the third stage called incubate, which is really just making sure that after you've received your loan, you receive some sort of support to walk you through that plan and the goal that you had. So we call that incubate, but it really is just a post-loan sort of follow-up and making sure we're there with you. So we actually have an 8-year relationship with our clients. And then none of us can do the work without advocating. So in order to change the ecosystem of how folks are financed, you need to advocate for policy change, financial system change. So it's that level of advocacy that's important. With the incubate piece, I do want to mention Forbans in the town of Eagle Butte actually did build a business incubator. So that was a long-term goal. We finally got it built in 2019 to support lower cost capital lease rates for small business startups. So that way they didn't have to pay outstanding lease rates right away, that we could lower the cost a little bit and incubate them while they grew their business and found a different place to work. So inside that incubator, we have a restaurant, we have a coffee shop, we have an office, and we have Skya, actually. We're incubating her startup of her Cdfi, and it's grown. She needs more space already, which is great. So just to show you that ecosystem that I've talked about, we actually do credit builder loans. So we know, as I mentioned, it's a credit desert, most in Indian country. A lot of banks, if you do live in a rural area, can choose to report to the credit bureau or not, which, surprise, I didn't know that, but banks don't have to report to the credit bureaus. Oftentimes they say that that's a neighbor of the client, which be, but it's expensive. So I think it's a sort of a line item thing for them, an expense line item that they're not choosing to pay. So that means you don't have a credit. If you're living in a community with banks, if you have banks, if you don't have any, and they may not report to the credit bureau. So individuals are able to access capital without that number attached. And we could discuss with that the politics of that. And then we build credit, and from there they can access any loan really. We do home improvement loans up to $25,000. We know what it's like on trust land, and banks looking at trust land is sometimes a non-collateralizable object, and that's not true. So we're there to sort of pave the way, and this is that advocacy piece to prove you can collateralize trust land and hopefully oil the wheels, the rusty wheels of that process, because it's not done that often in Indian country, and then pave a way for other lenders to step into that space with us. We do small business loans up to $250,000, and that looks like a lot of agribusiness. We've been doing that for 17 years. You can see below, like we refund machinery and operation equipment, different activities, like I mentioned, like the prairie dog eradication business, which eventually supports ranchers. And then we do start mortgage lending. So that also supports agricultural economy when you've farming, ranching family that needs to get a home loan. So really we see the work we do, we recognize producers as entrepreneurs within our community and kind of do wraparound services to support them at any level. Total, we've dispersed to, is 20 million actually outstanding, which is amazing. And we always like to talk about the collections of that. Everybody's scared to lend in any country, but truthfully, we've got less than a 9% delinquency rate on that, which sometimes makes people uncomfortable. But truthfully, it's high because sometimes our tribal court systems are a little bit slower in operations. So it's not like they ever vote not in our favor. It takes them a little bit longer because they're responding to so many needs within their community as on the civil lines. So agribusiness, we've been doing that for 17 years, and we did about 967,000. But finally, we convinced our board to do producer lending, and we've been doing that for the past 2 years, and that's just continuing to grow. So we've just in the past 2 years, deployed 1.7 million, and the demand is so high, we can't keep up with it. So it's about raising and capitalizing our funds now. So we need more capital to continue to serve our community and the needs out there for producers across the state of South Dakota. Next slide for Skya.
Hey, I just wanted to follow up on what you said about just the need being so high. And I think that's because, Cdfi's, while we've been in communities, especially like, Forbans, so long, you don't think of your local Cdfis for ag lending. And then now that the secret's out and we're great, like everyone's wanting to come to us and diversify their financial portfolio. And that's just a true testament to the successes of ag lending in Cdfis, because we have the same problem over here at Akiptan. We just can't keep up with the demand. I need to hire like 10 more staff people, and I need like $100 million. You know what I mean? And that's some wishful thinking on my part, I guess. But so I just want to talk about ag lending specifically at Akiptan a little bit. So we're based in Eagle Butte, South Dakota. We had I guess I was hired at the very end, 2017, to create this Cdfi, ag lending specific Cdfi, out from underneath the mines over there at IAC. And it took us about a year to develop all the policies, the procedures, for me to go to trainings and just all that. We really took our time and thoughtfully developed how we do things here. The ag finance model is kind of broken. There's a lot more foreclosures than there needs to be, and just all those different things. And so we were like, we need to do things different. And so we took that time and thought about different ways to lend and our policies and procedures. And then we finally opened up for lending, officially started deploying money in January 2019. And so that was a really exciting thing, because all this combination of work and thoughts and everything, we finally get to put our money where our mouth is and to prove our concepts and stuff. And Akiptan is the Lakota word for working together, doing something cooperatively. And then that's kind of our whole mission behind our lending philosophies and everything. We truly want to work with the borrower. We want to be a partner in their operation. We don't just want to give them money and say, this is what you can do, this is what you can't do, and you're going to pay us back tomorrow. You know what I mean? We wanted to do things different. So that's kind of Akiptan, our name is honestly just our mission behind our lending philosophies, because that relationship with our producers is our number one priority. I see I listed it twice here on the slideshow. So just to reiterate, that relationship is super, super important with us. We always stress communication. We even do quarterly check-ins with our clients. They're really informal. We just want to make sure everything's good. There's no questions. I have clients that text me pictures of their cows and text me pictures of their crops or their trucks, or just randomly. And that's great. It's exciting. It makes all the hard work worth it when you get to see these guys out there succeeding and stuff, because they're able to do this with our patient capital approach. So I kind of touched on it earlier when I was talking. But that whole year of thinking of how to develop Akiptan was focused on a patient capital approach. And the way that we do that is one of our repayment options has an interest-only portion on the front end of your repayment terms. So you can pay interest only for up to 5 years. And what that is designed to do and allows you to do is to get that upfront capacity growth when you're starting, or even if you're a 20-year producer, you've been in production for 20 years and you want to grow. When you get to pay interest only, your payments are so small, and that means that you get to take all your profits and buy more equipment with that to help you expand, to get more land to help you expand, to keep back your replacement heifers to be able to grow your herd. That way it allows you so much flexibility to do what you need to do to be able to get up on your feet and hit the ground running. And then after those 5 years, you can start making blended payments, and within that time frame, your operation could double, triple in size. And then those once big blended bank payments are much more manageable now, just because you were able to have that time to grow and to get all your growing pains out of the way and your learning curve and just all that. So that's our main driving force here down at Akiptan, is that investment style of repayment. We call it our investment style just because we want to treat it more as an investment, in that we're a partner in this with you. And so you're going to make those return on investment payments to us, that those interest only payments to be able to get started. And another thing, I guess, that makes us as CDFIs different than banks. Banks are just mostly worried about getting repaid back. That's their number one priority. And then CDFIs have long-term asset growth as a goal. That's the whole reason we have our interest only, our investment style repayment option, is for that long-term asset growth. Land in Indian country, that's our biggest asset. We're huge land-based tribes, or even small land-based tribes. Land is our biggest asset, and we're never able to mortgage it because of that myth that you can't mortgage trust land. So when you don't get a mortgage, your biggest asset, what are you supposed to use to be able to go to your bank and here's my collateral, I want to grow, this is what I'm going to do? You can't, right? So the goal is to get that long-term asset growth with us. And then that way you've got all these assets built up so that when you outgrow our lending limits or something, you can go to a traditional financing entity like a bank or something and say I am ready to go. I am set up for success. And here we are. And I think that's what truly speaks to CDFI style lending, is just because we are really truly focused on building a better borrower. And then, like I mentioned earlier, there's that technical assistance that's catered to your operation. I get to sit down with clients and say okay, where are you at? And what's your goal? Where do you want to be in 5 years, in 10 years? And then what's my role in getting you there? How can I help you get there? What can my financing do for you? And so that's just, we did a 180 on the lending process from what you would see at a traditional financing entity. Our style is just, like I said, just a 180. So with where we're at now, I pulled my current portfolio size this morning, and we're at about 3 million. I should have pulled that a month ago because we all our clients just made our payments. So we get to redeploy a bunch of this money and stuff, but our current size is 3 million. I would say that we have actually deployed within the last 2 years, 3.5 million in ag loans, or in ag investments. We only lend to Native individuals and Native owned businesses. We don't work with tribes. They have other opportunities. We don't want to tie up all of our money with tribes when tribes have other options than these Native owned businesses and the Native individuals. I see that Elise just sent a question in. Our average loan size here at Akiptan, so with our loan limits are 100 grand. And we either see the full 100 grand or we have smaller operations that take smaller chunks. I would say our average is probably 77,000, but I really need to pull the median because that would probably give us a more accurate number. But we either usually see people go for the gusto or start out a little bit smaller and then want to build from there. But all of our loans need to be ag related. There's so many other CDFIs out there like Floor Bands who are able to take care of mortgages and credit builder loans and other small business loans, and there's a huge ag need. So we decided to just specialize all of our lending to just agriculture, just ag loans and investments. And we can finance a plethora of different things. We can do operating notes, annual operating notes, lines of credits. We've done refinances. We can help you start an operation. We can help you expand your operation. It's really limitless what we can do. And with that, we also describe agriculture really broadly as well. Most of our portfolio happens to be cow-calf producers, just because that seems to be like a large part of what ag is in Indian country, but we're getting a lot more inquiries for new kinds of endeavors. We've got loans for greenhouses, for trucks. I had a call like a month or two ago, someone was asking about like a mushroom farm and just all these different things. We define agriculture really, really broadly. And so that's kind of really exciting. So I think 2021 is going to be a year of a lot of learning for us, because I think we're going to be able to branch out into a whole bunch of different areas. I see we have another question here. Sorry about that. If you had enough capital to serve everyone, would you prefer to be their sole source of financing to preserve your relationship and protect your producers? Absolutely. I wish. And that's the goal, but it's just that fundraising aspect. We don't get to go borrow from the Fed really cheap like banks do. Since we're nonprofit lenders, we have to go and fundraise it. So that's a huge barrier to a lot of these things for us. But yes, absolutely, because then not only then is it less risky from a lender side of things, because then there's no other lien holders. You don't have to worry about other banks doing things that aren't in the best interest of the producer. You don't have to worry about other payments due. If we could refinance everybody, a total refinance of everybody ourselves, that's like the dream, right? And that's a goal that we have. We just went over our goals for our fourth quarter board meeting over here at Akiptan, and then just that fundraising to be able to raise our loan limits, to be able to do more total refinances is a huge priority for us, because then that's the perfect way to balance lender security and borrower interests and borrower goals and borrower priorities. You know what I mean? Just be able to have all your financing set up at one place with really great terms. So.
And just for us, average loan size for ag, it's in that $100,000 range as well. You know, we go up to 250,000 on it, and we have actually even went up to 300,000 for one producer, but it's usually coming in at about 100,000 each, and that's pretty awesome. I think we would answer the question similarly, a little bit different in that, you know, if we had enough capital to continue to maintain those relationships, like if we would, and I think it really depends on the person and the client. Sometimes they want to maintain the relationship with their lender, but we are limited, as Skya mentioned, with not receiving money from the Fed. So our interest rates are generally higher than what a bank offers. Specifically, I'm not speaking for Skya. Skya has a different model, but for me, our interest rates right now are 6, 7, 8, which is really high for the market. But that's how we get our capital funders at 2 to 3%. So we're borrowing at that, and our profit margin is so low. So if we could switch over to get into a better refinance situation and get way lower interest rate from banks, that would be a goal. But once again, that's why this is really important to have that relationship with the borrower and look at each case scenario, because actually sometimes we're refinancing equipment loans from a dealer at 70%, right? So our interest rate is a lot lower for the operation. So it just depends. But always very transparent about what our interest rates are. We don't hide them under the thing. We show them what they're going to end up paying, because that's about what it is. It's about educating people. Like, this is what you're going to end up paying us interest. There's no penalty prepay, like please prepay, things like that. So it's all very transparent, and we do our best to stay within that. But this year, with rates being so low, it's been a difficult year for us to be the best choice producers, and that's hard to swallow, but it's just where we're at right now. Somebody asked about branching into lending to hemp farmers, not for CBD, but for by grain. Since the state of South Dakota, made that legal, we've gotten 3 to 4 requests on that so far. So we're actually sending that information to our board, who are making that decision, because all this is one board action to make that an allowable item to fund. And so there's a lot of issues. I have Kelsey Ducheneaux is on my board, and she has a lot of information about the soil in South Dakota, and knows the difficulty of growing hemp in the soil in South Dakota, and she's informing us on that. So we've got a lot to learn in that area. We're not opposed to it. It's just making sure that that's a sustainable operation for the borrower and that it's a good business plan. But we've got a few wanting to pop up to do that. And some of it is just actually setting up to sell it or resell it, or tea bags or things like that. So we're looking at it. Maybe 2021, actually, we'll see.
Yeah, and my answer to the hemp question is really similar too. We've gotten inquiries. We haven't done one yet. We've looked into it, and we say, well, if we're going to do it, we need to double check all the legalities, because you need to have the approved plan with your tribe and your state and just all that. And it's never happened, but we have had inquiries, and we are open to it at this point. Like I said, we just haven't done it yet. It's just so new. It's a little bit wild west out there with the hemp and it kind of being legal in different areas, or it's federally legal, but then the different states and just all that and stuff. And it's just so new. There's just, like I said, there's just a lot to learn. And then I see there was also another question. Do you work with cooperatives? Yes, they just can't be like affiliated with a tribe. We just don't do anything with tribes. Is just how our process is.
Yep, same for us. There's nothing against. We fund a tribal enterprise. We could support a cooperative easily. There's also some grants out there that support cooperatives. I would try to push them towards some grants before you get a loan, but would love to support a cooperative. We support a local cooperative right now in town of Eagle Butte.
That's great. Thank you. Let us, and folks, remember, please keep putting questions in. You have some incredibly knowledgeable folks on here with Skya and Lakota. So please send your questions. I know I have a couple just from all of this. Everything from agriculture lending to prairie dog eradication to race cars, and there's so many different opportunities with this. And I know all the different discussion about this is a focus on borrowers. And I think, Skya, you talked a little bit about this. What is the kind of process if you're a producer or starting your business, and what are the things that you need to know to come into to go talk to either one of you about what the possibilities are, what you can do to help, and how would I guess a producer, but what was the best parts for them coming in and being able to say, here's where I am at, here's what I need, what's most helpful?
Yeah, so I guess over here at Akiptan, like, just give us a call or stop in. I guess maybe not right now with COVID and everything, but just give us a call. And even if you don't have a plan, that's okay. A lot of our conversations start out with borrowers, like they come in and they say, okay, I want to get some cows to ranch with my dad. What do I have to do? And then, or with a greenhouse or trucking or just anything, they have an end goal. And then we sit down and we put pen to paper about how to get there. Like, okay, so if you're going to buy 50 cows, but you want to be able to get to 100, here's what has to happen over the next few years. And like, we have an in-depth cattle growth chart planning tool specifically for cows, but then we also we've got some truckers in our portfolio, and so we know about all the steps with like licensing and insuring, and like we help them get there. It's just, you gotta make that first phone call, you know what I mean? And you don't have to have all the answers. And I think that's the cool thing about native Cdfis is you don't have to have all the answers. Like, we're more than willing to help you get there. We're in this together, so just give us a phone call. And even if like I said, it doesn't all need to be planned out, just give us a call. So
yeah, I don't know if that question's for me. I mean, it's the same thing. I think that it takes a lot of courage to come into anybody's office and just talk your dreams and sort of say, I don't know where to start. And so we love coaching and training of our staff and our team through like motivational interviews that we can help you the questions, because we view all individuals as bringing all the resources to the table. It's just a matter of asking the right questions to get you to use your own resources to solve the problem. So it's true, it's been hard during COVID because we really value those like one-on-one conversations of sitting across the table and just hashing stuff out. But we can do that over the phone now, Zoom, if we can. We've been supporting some of our farmer ranchers with even purchasing, doing some auctions online, because that's new for some generations and just not tech savvy ranchers. So there's lots we can do. And I think the thing that about Cdfis is generally, no matter what you ask, the answer is not no. It's not yet, usually. If I have an answer, we'll say, let me think. And our best thing is what we do is we have networks of people, and we just ask other people to help support you in the question that we can answer. So I say the best thing you could do is just go shake one of our hands and introduce yourself, and we'll ask you a ton of questions. Don't be afraid of that. It's just about trying to get to that end goal. So find a CDFI in your area. They're all over on the Department of Treasury's website. I think Tommy Peterson might have shared one on her webinar, so that might be included in the packet. But even call Skya. I think we could find you a CDFI in general.
And I think just the coolest thing about the native CDFI industry is also like me and Coda are talking about our processes, but it's literally the same like anywhere. We're all so helpful. When I was going to all those trainings in that year of development that I had, I've never experienced a community that was so helpful. Like they were just like, here, Skya, come under my wing. Let me teach you all my secrets to success. Here's my policies. Here's my procedures. Here's what I do. Here are my contacts. Like this industry as a whole is so helpful. So even though your local CDFI might not be me or Coda, it's the person you're going to talk to is going to be just as helpful and just as willing to be helpful. I see one of the questions that came in is, do you help the youth? Yes, we do have youth loans and youth investments that we do over here at Akiptan. They're similar to an FSA loan where it's the $5,000 limits and then the age limits and just everything like that. But we do have some youth stuff over here.
Yeah, like what youth these days, so yeah, I think same thing. It's hard for us legally to go under the age of 18 unless you get a parent sign off or be in the process. So I think we haven't done an ag loan that way, but we would consider it. We've done other loans that way for small businesses, but not an ag loan. There's a question that says, why do you not work with tribes? So we work with tribes, the tribe in South Dakota, but I think we use them more partner. And if they start a tribal enterprise, we're able to help finance that or help the business plan or provide wraparound services like accounting services or give them advice about up a movie theater. So we're in the community to support them in that way. But I don't have anything specific about not working with the tribe. What's your reason, Skya?
Yeah, so in the development of this, the board chose not to work with tribes just because they've got other resources available to them as far as like capital, more established, like more support from the tribe themselves and just everything that they have more available to them than a 21-year-old rancher who wants to buy some cows. They've got more options, they've got more history, and so that's why we decided to just do the ranchers or native owned businesses. That's the reason that my board chose that. It's not the same for everybody. Thanks, I missed that question though. And then, do you lend to any native producer in the state or just your area? So Akiptan's a national native CDFI. We'll loan to anybody in Indian country with an ag idea. That's just who we are. And on the res, off the res, as long as you're in proof of enrollment or proof of descendancy and you have a business idea revolving around ag, we'll do what we can to finance it. So
yeah, my sorry is just the state of South Dakota currently, and that's because we, like I said, regulated by the Department of Treasury, and every CDFI has to say a target market that we serve. That was our defined target market. if we want to move beyond that target market, we have to get recertified by the Department of Treasury. So currently right now, forbearance just serves the state of South Dakota, any native living in South Dakota.
Great. And there you have the contact information up there. So as both Lakota and Skya said, don't hesitate to pick up the phone, or I guess or send an email to start that conversation and reaching out about how you can get your business supported by their Cdfi's. One question that I know that Lakota you raised, and Skya you mentioned as well too, is that there's the myth of mortgaging out on trust land, which is something that is a barrier to not only producers, but also to private capital. Can you talk a little bit about what that is and the successes that you've had, and I think kind of spelling that myth, not just with lenders themselves, but also with folks who may not think that they can get a loan or get funding because of that?
Yeah, I just think in general, that's the advocacy piece that we do, because a lot of information about Indian country in general, and it's not just about the land type. I mean, if somebody has misinformation about trust land, then they're more informed than most. So if you can discriminate on our trust land status, I'd say you're more informed than most. But it goes everywhere from like what tribal court systems are you held to. So sometimes somebody will be trying to consolidate ranching action, and a title company will discriminate on them because they will misinform the person that's consolidating it, saying you can't collect, oh, you're only subjected to tribal court or federal court. They always throw the federal in there. So it's that stuff all needs to be talked about widely and often, so things can go away, because it's a limitation for everybody living in Indian country. Land, basically, I think it was just the mechanics of it. The mechanics are cumbersome. The way that you use the Indian Affairs, and it's top of program officers and healthcare there with even mortgaging trust land. So it's just the bureaucracy of the government, which isn't bad, or it exists on all levels. So finding the right people to work that system, and like I said, it's not a broken wheel. It's just a rusty wheel of the process of mortgaging. And hopefully by moving more and more, Skya and this feed and other CDs joining, the wheel will start, being greased more often and rolling a lot faster. So for example, we recently just got a loan certificate of approval to be listed on they'll record it on the Land Titles and Records Office. So but it took time. I think this is the patient capital part comes in. So it took, from the loan closing period, took us, a year and a half to get the process done, which when you say to a lender who's trying to sell on the secondary market, they cringe at it. But for us with patient capital, having the relationship with the borrower, not being afraid that they're going to default on us in the year and a half, we're comfortable lending generally and having that, that risk out there with it uncollateralized for that period of time. The goal, though, is to shorten that period of time by working with BIA and increasing that bill constantly so they can shorten it, because we can't be the only players in the field. We absolutely need regular financial institutions to join us in this space to serve the need. So we're hoping just pave the way and ask others to join us, and so that's a constant process. What do you say, Skya?
Yeah, so when we were developing Akiptan, mortgaging trust land was a huge goal of our board chair, Zach. Zach Ducheneaux, you guys have probably all got to hear him talk by now. Because that myth just really grinds his gears. And so that was something we were really wanting to do. But with our $100,000 loan limits, the opportunity hasn't necessarily presented itself with us yet, because $100,000 is a lot of money, but when it comes to agriculture and land, it's not actually that much, generally speaking, And so that opportunity hasn't exactly presented itself to us as of yet. We've had some inquiries and we've looked at different things, but we haven't done it. But I'm super thankful that Coda is up there greasing the wheels to be able to figure that process out. But no, we're excited to be able to do our first one here at some point. We were hoping 2020, after our rookie year of 19 was out of the way. And we did look at some things in 2020. I don't think it'll happen this year within the last 20 days or whatever, but maybe 2021. You said, Cdfi's are always saying not yet. And I think that really is true. We want to be able to do it And then I see another question in there that was more so applied to me since CODA does do it. But would you serve tribes if your funding was unlimited? Maybe, I don't know, that would take an act of the board to change that target demographic there, I guess. I think if our funding was unlimited, we would definitely prioritize the individual producers. A little bit more about the backstory of Akiptan. Some of our startup funds that we've completely expended as of now were from the Keep Siegel Fast Track settlement. And then so our board was just very aware of that, and they wanted this money to go to the individual producers because that's where that money originated from. And that was a huge driving factor also in why our target demographic is what it is because that's where that money came from. They wanted to go back to those guys and stuff. So
yeah, I think we'd be remiss in saying that the role that the American Agricultural Fund is playing in this space is so important these days. You know, for CDFI to get the capital, low cost capital, like these are grant funds, for them to exist is really going to change for CDFIs that want to enter the agriculture field and serve ag within a region. You know, Skya and I are doing it because it's prominent. You know, ag is a prominent part of our economy. But if you want your CDFI, urban CDFI to do this, having NAF there, Native American Agriculture Fund, huge to change. It's a game changer for everybody. So if anybody from there is listening, thank you for all the support that you've done in this field so far.
That's great, and a big kudos. And one question that's something that came up when you both were presenting is the idea that when the producer does well, the CDFI does well, and there's sort of shared space of making investments in cooperation. And I wanted to kind of just dive, if you both could dive a little bit into that approach from your perspective, and what does that really mean, and how does that kind of differentiate from other different types of sources of lending and credit?
Oh God, how much time do we have left? So one thing that has always blown my mind, the more that I have gotten into this industry and learned and experiences and everything, is I do not understand fully why banks lend the way they do. The way that, for the most part, I shouldn't say all banks are like this, but for the most part, it looks like their number one priority is just getting their money back. They don't care how, as long as there's enough cash flow there, that's what your payment's going to be, and we're going to bring it back in, and then we might relend you in a year or in 2 years when it's paid off, right? You know what I mean? And that has just always blown my mind, because producer success is our success. When they're succeeding, we get paid back. So why not set them up to succeed? Give them the flexibility to have a bad year. You know, especially this year with the market prices and just weather and just everything. I'm sure there's probably a lot of traditional lenders out there that are having to do restructures, refinances, and just all that. And with our more patient style of financing and that great relationship that we have with our borrowers, our restructures and refinances are pretty minimal this year. Like, it's not even a thing. And I would be lying if I said in April, looking at the futures, that I didn't lose sleep at night. But the fact that we had a bad year and our financing stood the test of time is a true testament to our model and the patient capital approach being the better approach for financing. We are able to absorb this bad year, and we're okay because we set our producers up for success, because money repayment we didn't want that in a quick turnaround time. We wanted to leave the money with our clients, let them do what they need to do. If they have a bad year, it's okay. You're not going to lose the farm, you know what I mean, and different things like that. But it has always blown my mind that, like, why banks aren't setting more of their clients up this way, just because, like, you know, like I said, if they're not succeeding, we're not succeeding. And so we need to give them the tools and the innovation and the flexibility to succeed. So,
you know, I can take like a nerdy perspective to this, and it's more like, you know, the financial system honestly is broken. The ratios are set up and not reanalyzed. Somebody a long time ago determined that, you know, debt to income ratio had to be such and such. The equity amount is comfortable at 20%. And really bankers, I have to say, because my husband's an ag loan officer at a local bank, But you know, they don't do any manual underwriting, right? So they enter your number as a producer into a system that has developed the algorithms that don't necessarily fit anymore. Well, actually, they never fit, right? So we've done in that data, when we served a community 20 years, we've done something called a regression analysis on our data to say what ratios are mitigating risk. So when we risk rate a client, we have very similar setup. Most of us modeled ourselves after financial institutions, so we have more flexible nodes, but we have this risk rating categories. We just manually underwrite. I don't push them into a system and then it spits out a number and that's what you qualify for, right? So the characters I want to say, like on equity, collateral, you know, commitment to business or commitment to your ag plan, character, and credit score, of those 5 things that you're measured on by financial institutions at 4 bands with our history of clients, out of 105 clients, the ones that were predicting risk of the portfolio were credit score, unfortunately. Sorry, guys. Credit did go up, and then it was commitment to business and character. Those were the only ones that actually accurately predicted risk in our portfolio. So that means if you had a lot of equity and you brought it to the table and rated you the highest I could, and you've got the greatest equity, it actually, the people that had brought the most equity were performing in my portfolio. So just taking the time to do that, that's what we're advocating for. As financial institutions, somebody do that. Somebody do a regression analysis and find out which one of those ratios properly mitigating risk in your portfolio, because they've been told it by their boss, who then they implement it, and now it's put into the software system that doesn't think and doesn't have that personal touch to it. So somebody needs to do that in the financial, and it's going to vary by community, by bank. It's important, and I hope somebody listening will do that at their bank, and things could change because we know it's true, and we're going to be adjusting our risk rating based off that information, and then we'll relook at it again in 5 years, because that's what it's about. Things change, staying abreast of the changes and making sure you're serving your community so that you meet the needs of the community first, not your shareholders. So it's more about that stakeholder economy versus shareholder economy. There's a lot more in that, but the equity piece that banks require ask folks, especially for Native Americans who historically have been stripped their assets in the colonization process. You ask them to bring that amount of equity to the table, there. So we do need to think some type of equity fund to support our answers. That's my next thing, is thinking about, and other people do. Montana has an equity fund. The state of Montana has an equity fund. There's some things being done to offset that equity piece there, because if more farmers ranchers could bring that equity that's required by the banks to the table, a lot more deals could get done. So that's a conversation for another day, but these are the things that Skya and I hear about being problems in the industry, and that's that other piece of the work we do, is sitting about, well, how can we figure it out? Because not only do we lend differently, we have to understand how the regular institutions lend. So we've got to understand the whole system in order to, serve our customers the best. So sorry, I got on my soapbox there, guys.
No, thank you for bringing that up, because yes, like over here at Akiptan, sweat equity is like a huge thing. You know what I mean? Like we look at what you've already done, and it doesn't necessarily need to be like a formal education either. If you're 18 years old, no credit score, fresh out of high school, we look at the last 18 years of where you grew up on a ranch, and then that's what equity is part of our risk rating for you to get cows. And the fact that you know how to do all the work and you've put in all the work, you know what I mean? Like Corda said, like they just punch in numbers, and then that's the underwriting. And Cdfi is just, that's part of that more of a holistic approach. We look at things differently, because you need to start doing things different if you want different results. You know what I mean?
Yeah, absolutely. And thank you both for the answer. I think we have another question from the audience as well too. So you've talked about some of the brokenness of the current lending systems, and we see the economic and policy barriers that continue to colonize tribal people by limiting access to credit how do you measure prosperity in your CDFIs in a way that uplifts the holistic world visions? It's a pretty substantial question. I think we can just move to the more discussion part of it as well.
Yeah. Do you want to go first, or you want me to?
Go for it, yeah.
All right, so that's impact measurement is like a big thing in our world or any nonprofit. Like you're trying to measure your impact, and then like how do you do that? And then a lot of CDFIs, especially like your more typical CDFIs like floor bands, like they're able to measure impact with like jobs created, jobs sustained, businesses created, and then I'm sure there's so many more. Over at Akiptan, where it's sole proprietors and different things like that, you don't get to have your standard impact. So like measuring impact was different for us here at Akiptan. I had to sit down and kind of think outside of the box a little bit. And then, like just because they're sole proprietors does not mean they're not businesses. And so we kind of like flipped that a little bit to make that fit our model in ways that other people could understand about jobs created and jobs sustained. But then we also looked at like asset growth, like what were we able to buy, what were we able to retain, the value of different things like that. So that's a little bit about how we measure that prosperity with our clients within our CDFI, is to be able to look at what they were able to grow their, like what asset growth was there. And then also if they do that investment option, that investment and repayment option, we calculate the difference between the payment amounts, and we get to see how much money we leave in our producers' pockets each year by being a patient capital lender, so that they can do what they need to do with that. Oh my God, there was like so much more, but I just trying to shorten the soapbox because I know I want to let Coda speak before we run out of time. So go ahead, Coda.
Well, yeah, that's a great question. That just is also to the limitations of measuring impact on a short-term basis. So we're trying to measure the prosperity that uplifts holistic world visions. There's a lot that can do that, but what we do is having the 8-year relationship with the client, you various things along that 8-year relationship. And truthfully, a lot of it's hard to say. We aren't standing a CDFI saying we're the sole answer of increasing happiness. We've tried that. We've tried to say we will improve the quality of life of community and residents. And quality of life indicators are impacted by many, many things other than whether they received a financial loan from us or not. So careful to place ourselves taking credit for successes as well as taking credit for failures, right? So we've thought through all of that. We've operationalized our mission statement, making sure we're measuring things that we can measure and take credit for. But truthfully, I think it's just about treading carefully in this space, ensuring that the work that we do isn't harming anyone. To me, that's most important. So one of the things we look at, other than debt to income ratio, so don't just look at the debts that you formally hold, ensure that your income can cover those debts before we lend to you. We look at expense to income ratio. Let me explain the difference. So debt could look like credit card debt, car loan payment, house payment, and that's it. Then the bank will say, sure, you've got enough cash to, not the bank, sorry, I'm not trying to fingers, but anybody would say, sure, you've got enough cash to take on this loan. Did they consider, can you still pay for your groceries? Can you still pay for those activities that support your family's livelihood? Like funeral expenses, birthday parties. So what we do at Cdfi, this manual underwriting, we actually look at expense to income ratio to make sure quality of life you've set out for your family is still being able to met if you take out a loan with us. And we never compromise that. So if we do deny somebody, it's because their quality of life decline by taking out additional with us. And we try to explain that. And there's opportunity to come back, fix the situation, save some money, budget, do these things so that you can't compromise your quality of life by taking on this debt. To me, that's how we can continue to uplift the prosperity of the individuals that come to us, but constantly doing evaluations of our own programs to make sure that we're not harming individuals. To me, because our financial institution carries racist, algorithm with us, constantly question it and being aware of it and switching so we know we're not doing the harm in the community. That's how I'd answer that question right now on the spot.
No, thank you very both. Well, I think we're right at the top of the hour. I know we've been very fortunate to have an hour of y'all's time to talk about this. And so I know we could probably have a whole other hour and not scratch even just the additional parts at the surface of what you do. So I just wanted to say thank you both very much. Thank you so much, Skya and Lakota, for your presentations and your work and your passion, everything you do with this and your vision for how to be able to support tribal ag production and producers in Indian country. And so please, everyone, virtually join me in thanking them, and see you all on the next panel.